Hey everybody, Day Trader Rockstar here, and today we're going to be talking about business plans for the trader. And I always talk about it on the radio. I'm always stressing the importance of trading like you're trading a business. Your business. You are a business. You are that trader. So you're trading for your business. And there's so much to go into that. Treat your trading like a business. And if you were a real business, you would have a set of rules, and that's what we call the business plan. So you don't hear business plans for traders that much. But everybody who has a business should have a business plan. If it's a hobby or something like that, you don't need a business plan. If it's something that you're not doing serious, you probably don't need a business plan. But if you're doing it serious, and there's a method of making profits and stuff, you have to write out the series of rules to kind of keep you in check. Especially if it's a successful business. And that's, you might think, well, I could do it all in my head. It's good. This is a good little exercise. If you want to do it, this is my business plan. I'll show you what a business plan looks like. And it's you can actually break it down to a bunch of questions about your business or what you want to do. It's just a general outline, and you fill it in. I'll add this. I'll add a link to the questions here. Because this is how a business plan is set up. Anyway, I want to go through mine, and it kind of breaks down the HPS methodology that I use. So it's actually a good review on the technique that I'm using, because that's the only technique I want to trade futures. And let's put it out that this business plan focuses more on future traders. I trade the ES mostly, but NQ, some other futures and also. But we're talking about the main ones. But the methodology, will work on anything. So this business plan is good for anybody's purposes. And then the other thing we want to talk about is, so this is used mostly, what is written down here is based off of the divergence setup. And again, I teach that. If you're not familiar with it, I teach that pretty much daily at Day Trading Radio. I have a course out on it, and that's my business plan. That's the setups that I look for during the day. So let's break this down. Why am I trading? Simple. Everyone has a different reason. I remember when I started trading, it was 92, 93, 94, and I quit my job. And I was in my mid-20s, and I didn't have any, I didn't have a family, I didn't have anything. I was just, I was able to do anything. So I decided to move to Florida, live on the beach, and just be a day trader. And I was able to do that. And that's what I wanted. That's why I was trading, to live on the beach and just do whatever I wanted to do and go fishing and stuff. Now I have a family, a house, mortgage, and stuff, so I trade for different reasons. Everyone has a different reason. But I also want to trade to prove the methodology is effective and profitable. Something I teach all the time. You have to show it works. If I did not have the responsibilities of a family and stuff, I'd probably trade like I used to. I used to go to different countries on vacation, set up trading, going into the internet cafe, renting 4 or 5 of their computers and trading the whole day. And at night, just explore the city. I did that in multiple countries. So again, what's my approach? Well, after 23 years of trading now, in the first half of that, I have to deal with the tech bubble, 9/11, all these the banking crisis. I've seen a lot of it, traded through all of it, and now realizing, looking back, there's no sure thing in the market. There's no guarantee, but there is things that over time start to show themselves. And if you could get past you have to understand there's no holy grail, but there's something very close. And people are always looking for something better than the next best thing. But this next best thing is the best thing. And you'll eventually realize that. You'll see it over and over again. And it takes time. So that's my approach now. My approach is to focus on this specific setup. And then I give my formula of it, and I can go over this stuff with you, or you can review it. But I do a lot of the videos for the members of Day Trading Radio, so A lot of the videos have all this information on it already. The goals. A lot of people put goals on their thing. I find that goals are kind of a setup for failure, honestly. I always used to love goals, give me a goal, but if you weren't going to get there and you would end up gambling or pushing yourself to a limit where you're not supposed to go to get to that goal, you start to break out of the methodologies that got you there. You start to gamble more. You don't want to put something hanging above you that makes you look like a failure if you don't get there, because there might have not have been quality setups to get you to that point. There might have been just maybe, 7 setups during the week, and you're expecting to get 20. And but that's okay, because that's very important to be able to have that discipline not to chase anything else, because that will eventually just build on itself, and you'll continue to just profit. So the goals there. I don't like goals. But if you want to have other goals, I said I'd take every qualified trade. I'm working on that still. I don't take all the good setups. That builds confidence. Lots of times, mostly because I feel like I'm not getting the optimal setup when I'm on the radio. I see it after the fact, and then I really pay attention to my rotation. But if I do it by if I'm not on the radio, I tend to trade all of them. And this week we actually did trade. I had 4 ES trades, 4 for 4, and each one was a divergent setup, and all of them worked. And the last one I did multiple contracts, and that worked too. And I'll try to go back over those maybe in a bit, just to show you those divergences. And then the previous video I sent out last week, when we talked about going back 2 weeks, and we did 2 weeks of review of all the divergences. Every single one worked out, and we put in the worst trade possibilities in there too. All right, so the objectives: to stay true to the criteria, continue identify and execute trades when the criteria is hit, not hot. What markets do I trade with this? The ES, the NQ, the YM futures. Time frames. All right, this is all, and again, this is all part of a business plan. It puts you in it puts these rules out there that this is what you're doing, this is how you're doing it. Everything has a step and a process. It keeps you in track, because that's the best way of profiting on this technique. You have to let it play out. And then the entry rules are very defined for you. The short side, long side, both of these. I had a little bit more stuff in there. Pre-market activities. Tune into DayTraderRadio.com. What I like to do is review the previous day's chart. When I come in the morning and go on the radio, I usually scroll back and take a look at the setups the previous day, and take that bird's eye view of the market, because then you'll start to see the bigger pivots, the big moves between the lows and the highs, and what are the bigger moves in the day. And most likely you're going to probably see a divergence in one of those big pivot areas. So we're always hunting for that during the day. Post-market activities or routines. I used to trade a lot, and I used to research a lot, and it was great because I was Jones in trading. After a while, it got kind of old. So I don't kill myself with too much after-hour activity, except on certain days, and I tend to go outside and enjoy it more often. So reward yourself. Don't get caught up. Don't overtrade. Step away from the markets. Decompress. And then what tools do I use? What tools are needed for your business to succeed? For me, I've built tools around what I believe in. So I have my Rambot divergence indicator, give me my 5-minute signals, 3-minute signals. Get those text messages to me. I only have to be near the computer, and if I see a 5-minute, then it makes me want to go look. And if I'm looking at divergences, I don't want to miss that signal. And the divergence is the product I'm selling. And so that's my business plan, right? So I have the business plan, I have the technique, I have everything set up, but I don't want to miss it. So I have the Rambot. Of course, I'm announcing them. High probability setups is the methodology behind it. And the tradometer. I like to have the tradometer to confirm, especially if there's a Tom signal along with a divergence signal. So these are some of the tools you could use. And then the discipline, comes down to discipline. I think this is the weakest section of your business plan is the person who is going to be trading, the individual trader. Because he's going to have to develop that, or you're going to have to develop that confidence to take each one of these setups. You're going to have to develop the patience to wait for them and not stray from the business plan, and other things, patience, discipline, fear, greed. There's things you're going to have to get through. It's not easy, but the more and more you do this, and then again, practice is okay, but you have to always try to take the setups, because you have to have that data, backfill data. You have to have that back testing. You have to see how they all perform. You can't just pick and choose. Perfect practice makes perfect, not practice. Perfect practice. I don't know who told me that, but I always remember that. And my golden rule. Biggest thing that holds you back is fear or failure. So I think this helps a lot. The HPS methodology. Even more so, even more is the divergence indicator, and just developing a system around it that really, benefit by developing your patience, your discipline, and becoming a true business at this. So that was some of the that's what my business plan looks like. Everything is defined on this section. When we talk about order entry, we have that. I have all that down. I have the profit exit criteria, automatic stop, risk management. We talked about the different. This is a great little spreadsheet, and I think I have this in the forum now. If I don't, I have to get it in there. And it talks about your risk versus how much of your account you have. Starts here's an account for 2,500, 10,000, 7,500. I had some other ones on there. They go up, and we just talk. It breaks it down. So when we talk about raising your position, your stake, if you continue to trade well and you're making more and more money, you want to be able to, go up in size. Apply the same rules, but apply more money to it, and that's when things start to compound. So that's it. Let's go back here. Another thing I could say with your business plan, if you're starting off, especially if you're starting off, and you're building a method. Now, like I said, I think there's nothing better than the HBS methodology, in the divergence trade. I don't think there's anything better. But everyone needs to find their own way. And if you find something great, let me know. The hard part is going to be, again, the fear factor, the confidence, and the greed. Conquer that, then you're going to be successful. Start a paper account, 2,500 to 5 or 20, whatever your paper account is. Double it, and then put in real money. I think what I said in the bottom here. Let me go see. Let me see. I think I have it here. My criteria here. Here it is. Apply method, trade demo. Once account doubles, fund new account, and repeat. Means start with 2,500. Go. So start with 2,500. Go live at 5,000. Take the setups. Start with 2,500 paper money. Trade it up to 5,000. Use the technique. Stay within the business plan. You get there. go live. Start at 5,000, go to 10,000. Get there, go live. Whatever the amount. All right, before we end this, I just want to go back and show you some of the divergences that appeared this week. This is really interesting. Very interesting because, again, I've been marking them off all week, and this was even Friday. I was on the other side of the mic today and marking them off, and I actually got one trade off, too, which made my fourth trade of the week. And, again, it doesn't sound like a lot. But remember, we're only looking for certain setups. So on average, if we get 3 to 4 setups a day is good. If I could grab, one of those each day, that's good. I want to try to get more of those, especially if we're seeing them. We go back just today, where there's a double top divergence here, a big breakdown. There was a nice perfect divergence here at 11:30. Look at the move up. No divergence really here. We kind of pulled back here. Triple bottom divergence here. It moved up. Higher high divergence there. And look at a big move down. All those moved. So that was 1, 2, 3, 4, 5. I think 4 or 5 setups just today that were potential setups, and that's what we should be taking each and every time. Each one of those also worked out with their stop. If you know the methodology, the stop goes just past that second stage of the divergence. And then we go back the previous day, and again, you'll see some of the, there was a divergence right here. I mean, it's amazing. Some of the I think there was a divergence over here. It moved up. I mean, it was some great, another divergence here. Look at this. A divergence in a wedge pattern. Look at the big move. You cannot afford to miss these, It's a good advertisement for the Rambot, actually. The Rambot is actually going to text you every 5-minute divergence that sets up. It'll test you. It'll text you and email you. You could set it up. So definitely take advantage of that, especially if you start to trade in this way. All right, that's it. For more information on anything, you can check me out at DayTraderRadio.com. Check out theschoolofstock.com, theschoolofstock.com for the divergence course. There's I basically teach you how to trade the divergence setup. It's really intense. And there's another course there for the whole methodology. Good beginner courses there. And I think that's it. So everyone have a great one. I hope you enjoyed the little video on business plans today. One last thing. This is an outline of an outline. This is not a full business plan. I'm leaving out a lot of little things here. I wanted to fill it out, show you kind of an outline of how to build one. You're going to have to add things in, like more detail on your methodology. I'm just giving you some basic outlines of my methodology. The objectives, the stop rules. You might want to make it a little bit more comprehensive and detailed. All right, the better, more detail there is, covering everything. It's a business plan. It's like, it's your Bible. It's your work Bible. So the better you can make it, the better it'll be. Also, compensation, how you're going to be compensated. That's important to put on a business plan. How do you get paid? How much money you start with? Where do you, what's the thresholds where you start to move higher? What's your what's your process of increasing your contract size? All right, so there's a lot of little things that we didn't add to that, and I'll actually make a part 2 of this video, and I'll actually break this down to the pieces that we didn't touch. We'll talk about starting off, the money that we need starting off, and the other ones that we just talked about. All right, so this will not be the end, but it'll be part 1 and part 2 coming soon. So I hope you enjoyed it.